I'm Charlotte McLeod with the Investing News Network, and here today with me is Ross Beaty, Chairman of Equinox Gold. Thank you so much for being here online to talk with me today.
Pleasure. Thank you, Charlotte.
Yeah, and of course, it's great to have you here to catch up again. I want to start off by talking with the gold price, which is what we usually do. We're coming off kind of a summer that's been a little bit disappointing for some investors. And I remember in the past, you've said that people need to take a step back and look at the forest instead of those individual trees.
Yep.
So to begin with, I wanted to ask you if you could tell me what the forest looks like and what maybe those distracting trees that people are seeing at the moment.
Well, it's very true, but it's also true to say I'm among the disappointed ones. I am surprised gold's not over $2,000 an ounce right now. I don't know what it should be at, but I think it should be higher than it is. I've been quite disappointed in how it's performed, and yet $1,800 is a pretty good gold price by any stretch of the imagination. It's held in pretty well here, despite a lot of naysayers. A lot of people have tried to tackle and preach the bear market for gold to hammer the price down, and I think it's withstood a lot of that. So it's hung in there against a lot of dark forces. I'm staggered that it's not higher because I don't see any reason that anything has changed in the last couple of years that don't present a bullish case for gold. We are not just threatening higher inflation, we are experiencing higher inflation. And inflation is always a bullish case for gold. The dollar is strong. Is it going to be stronger? How can it be much stronger? It's been strong for the last 5 or 10 years. It's got a crack. That will be great for gold when that happens. The S&P 500, the Dow is hitting record highs almost daily. That is not going to go forever. These bull markets in anything nothing goes forever. When that cracks, that will also be good for gold. This time everything is different than it was 10 years ago when we had the tapering and the so-called taper tantrum that affected gold prices. That's not happening this year. There's so much more debt. There's so much more money being printed. There's so much more fear and concern about inflation that never was the case 10 years ago. So I just think everything today is arguably, as strong as ever for gold to continue to go higher. It's not going to change dramatically. And if it does, it will be just for a short while. In other words, if there's a crash, everything's going to go down, but then gold should pop back up like it did in the last 2 or 3 crashes we've had. It should be the most successful investment category of all, because it's the kind of thing people go to when there's chaos and misery on the street. So I love gold. I still love gold. I'm delighted with an $1,800 gold price as a big producer of gold, but I really think the best is yet to come.
Right. And you've talked to us about some of these themes before. You've mentioned, the US Federal Reserve can't fix inflation by raising rates, because if they raise rates, then the major markets will crash. And I think something that people have trouble visualizing is this situation where there's no way out for the Fed. What does that actually look like? I don't know if you can share any more thoughts there.
I actually don't know. I mean, what I do know is that people are awfully faithful to rhetoric. If the head of the Federal Reserve says, "Oh, we don't think inflation is going to persist. It's going to go down again," they believe him. I mean, why on earth would they believe stories like that? He says, "Well, we're going to control things by manipulating the interest rates." Well, that's fine, except if he tries to do that, he's going to crater everything else. And I just honestly, I don't know how it's going to end, Charlotte. This situation we're in right now, it's just getting more and more like an inverted pyramid that's sort of creaking around on a tiny little spot, and it's going to fall over. Where and how and when, I'm not sure, but I'm just sure it's going to happen. And when that happens, hang on to your hat and own some gold. And gold,
right,
that's the other thing that's weird. In all my career, I've been running gold companies now for 36 years, I guess, gold and silver companies. My first company was a gold company. Then we had Pan American Silver for 27 years. It became the world's second largest silver mining company. And it's a wonderful, wonderful company today with a lot of gold production too. And now Equinox Gold. I think in my whole career, I've never seen gold equities as cheaply priced as they are today against the gold price. They're just free. And it's not just Equinox Gold that's like that, or Pan American. It's all the gold companies from small to large. It's just a weird time, and I quite frankly can't quite understand it. Why you have a company like Equinox Gold that has 600,000 ounces of current gold production, going to 1.2 million ounces in a few years, with the best growth profile of any gold company on the planet, an incredible financial statement, a great balance sheet, tremendous cash flow. Why it's trading at 0.5 times net asset value, when back in the 80s it would have, or 90s, it would have traded for 3 times its net asset value. It's a mystery to me, but it's the world we live in. We have to accept it and move on. And I happen to know that cream floats to the top eventually, and that it's a company that's going to be better priced in the fullness of time, for sure. And something will catalyze that jump. It'll go from a 0.5 times net asset value multiple to a 1-time net asset value multiple, and then life will kind of return to what it's normally been for the last 35 years.
Right. And certainly I've been hearing about that disconnect between what's going on here. So your response then, as somebody involved with a company, is to simply keep doing what you're doing all the good work, and then just wait to see what happens.
For sure. What we deliver to investors is fabulous leverage to the gold price. You're not going to buy an Equinox Gold or a Barrick Gold or any gold company if you're not bullish somewhat on the gold price. Just because if gold moves up 5%, our stock should move up 10 to 20%. And that's the leverage we give people. And it works on the other side. Of course, if gold goes down, we're going to go disproportionately lower. But if you do believe in the fundamentals of gold, which I think most of I certainly do, and I think all of our shareholders do, we're in for a really fun run if gold either stays where it is today or trades higher. If it stays where it is today, we'll trade higher based on execution of the business plan. As you said, we just put our heads down. We deliver leverage, both current leverage on the income statement through producing a huge amount of gold today. So, at 1,800 gold, we're making a great margin, and that's going straight to our bottom line. And then we have 29 million ounces, like 29 million ounces of gold in the ground that becomes more valuable with every dollar the gold price goes up. And when you have a massive leverage position like that, you're poised for outperformance, and that's what we're all about, I think, in the future, because we've actually underperformed this year. It was a kind of a lousy year. We outperformed. We're only 3.5 years old. The first 3 years we outperformed everybody. This year we underperformed, and we underperformed for a couple of reasons, which are gone. The first reason being we took over a company in March. Some of these shareholders of that company have been selling shares, so a lot of stock hit the market. And then the second problem was we had a social problem at one of our mines in Mexico, and that really hurt our company because it was an important asset of ours. That social problem is gone now, so I think going forward we should return to where we were, if not higher, and that's what's happening right now.
Right. And I'm sure that many people are familiar with Equinox Gold, but for those who aren't, maybe we can give some quick background information. I know one of the big goals is to reach 1 million ounces of gold production a year. So maybe you could outline the path forward to that and why that's a key goal for the company.
For sure. So Equinox today has 7 operating mines. It has 4 in, I almost forgot. It's got 3 in Brazil. It's got 2 in California, and it has 2 in Nevada, in Mexico, I should say. Nevada. I'm thinking Nevada because we just did a deal with a company to help create a brand new Nevada gold play called I-80. So we have 7 operating mines. We'll have an 8th operating mine when one that's in construction now opens up in about 4 months. It's called the Santa Luz mine in Brazil. So let's just assume that's going to happen. That's going to add about 100,000 ounces a year. That'll take us to next year's sort of 750,000 ounces, plus or minus maybe 800,000 ounces next year. We're 600 this year. We'll be about 800 next year, because we'll also have more production from our main mine in Mexico. And then we have 200,000 ounces incremental production from an expansion project in California called Castle Mountain. We have 240,000 ounces a year that'll come from development of a big gold mine in Ontario that we're building right now. That'll happen in 2.5 years. And by the time those are done, we have incremental production increases in Brazil at another one of our mines. So we'll be running at about 1.2, 1.3 million ounces a year in a few years when we get all those growth projects finished. There's 4 big growth projects in the company. One is under construction right now. It'll be finished in January. One is in Ontario, as I said. One is in Mexico, and one is in Brazil. And one is in California, I should say. One is in Castle Mountain in California. So a huge amount of growth. They're all low-cost mines. They're in 4 countries, safe countries, stable countries, with the exception of the social difficulty we had in Mexico, and that was for very unusual reasons, I would say. You know, I think we've got a great reputation for excellence in environmental, social, and governance issues. We've got a very strong technical team, robust balance sheet. We don't need to do any more equity issues for all the growth we've got in front of us. It's just a fabulous story. I just love it.
Right. And of course, the company is no stranger to making acquisitions. You mentioned the Premier Gold acquisition closing earlier this year. How are you balancing all of the purchases with also kind of having an exploration and development portfolio? Because we know that's important for companies as they grow.
Well, it's not just important, it's fun. I mean, I'm a geologist. I love exploration. It's a great way to create wealth. And we've been very successful at doing that. We've made a big discovery in Brazil. We're doing a lot of exploration work in Mexico. We have just taken a mine in California, the Mesquite mine. We just put out a reserve statement. Sorry, it's really bright here. I'm just gonna put my blind down here. The sun is just blasting in. Yeah, that's better. We've just announced in Mexico that we've increased our resources in a mine that was supposed to be closed by now. Probably it'll add another 10 years of production at least. So that's been really, really fun and successful. And I love exploration. I love you know, finding something from nothing, and that's been something we've been very good at so far. But at the same time, you also have to, you know, we're not. I mean, as you can probably tell, Charlotte, I'm trying to build Equinox fast. I'm trying to get scale as quickly as possible because I think it's wealth creating exercise by itself. You have better multiples, you have access to better shareholders, you get into all the indexes. Scale is important. So the only way you can get scale fast is doing deals and acquiring companies and rolling up and that kind of thing. So we've been doing that all along. We were created out of the merger of 2 companies, both with development plays. Both of those development plays are now producing mines. We then bought another mine in California from New Gold. We then acquired Leo Gold, which brought us 4 operations. We then did a deal with Premier this year where we acquired this big development play in Ontario and another operating mine in Mexico. So, you know, we're really a combination of wealth creation through M&A and also through exploration success and good operations.
And are there more acquisitions coming in the future? I know you've done so much already, but it seems good to ask. And especially because, you know, we hear about the last cycle when companies were making acquisitions, when the price was high, they ended up paying too much. How do you balance all these things when you're going about building the company?
Very good question. I think you have to get your timing right somehow. You have to be at the right time of the cycle. A lot of those deals that people criticize were bull market deals at the very top of the market back in 2011, 2012. And when the gold price went from $2,000 an ounce to $1,100 an ounce, or $1,050 at the bottom over the space of just a couple of years, you know, anything that was done at the high looked stupid and was wealth destroying. So you've got to get your timing right, and that's hard to do exactly, but I think we certainly did it in the first couple of deals we did. The one we bought this year, you know, Premier Gold, the timing was poor in terms of the fact that gold had already had a pretty good run, but the company was really cheap for a whole bunch of reasons, and that's why we think we're going to demonstrate that we got fabulous value from that deal. But quite frankly, it's tough, and we are absolutely not doing anything more for a while we execute on what was right in front of us. You know, the most important thing right now is execution on our existing assets, and that's what we're doing today. Will we ever do a deal again in the future? Yeah, we'll do another deal someday. Sure, of course we will. It's part of growing a big company and getting better leverage to gold and giving more scale and more value to investors through increasing production and reducing our general and administrative expenses per ounce and our exploration expense per ounce and all those things that smaller companies get killed with and big companies benefit from. So it'll come eventually, but it certainly won't come in 2011. and it will only come, if ever, if there is real value creation that comes out of it.
All right. And going back to how you've been talking about building a large company, definitely that's something I hear frequently that's important for getting those larger institutional investors. And, maybe we can talk a little bit about how that potentially trickles down in the space, because we tend to hear that the money will come to the larger companies and then it will move down. Would you say that is true? Is that something that we do see happen ultimately?
It is true, generally speaking. There are exceptions in terms of certain times in the market where it's not true, where everything goes up or everything goes down. But on the whole, money favors scale. It favors scale because the larger companies are less risky. They're more diversified. They have better balance sheets, maybe stronger management teams than smaller companies. For example, a one asset company, you'd better be lucky, and that asset had better be well developed in every way, in operations and social issues and in employee issues, everything else. Because if it isn't, that's the essence of that one asset company, and it sinks or swims on that one asset. We have 7 operating mines, and we'll have 8 or 9 in a couple of years. We'll probably shed a couple. We'll probably get rid of the smaller ones and focus on the large ones. But still, we have a diversified, broad asset base in 4 countries with a very robust financial statement and income statement that is really going to be protected in almost any downturn. So we're very solid, and we're very low risk, I would say, on that front. And that's what larger companies offer, is the lower risk, higher reward potential, equally high reward potential, but much lower risk. That's why I think today we want to go for scale.
Yeah, and certainly the way that investors often go, if they want to get into gold, they don't know very much about it, they'll go for the big companies. They may also go to ETFs and things like that. That often happens. What do you think about that? Is that valuable for the sector or not so much?
You mean the ETFs?
Mm-hmm.
Yeah, well, ETFs are a different way to play equities. It's a
Yeah.
rather lazy way to play them, because it means you're not looking at value. You're not looking at value of management, for example, the quality of the exploration asset. So I don't think it's a very smart way for people to play it. But then a lot of people don't have the time to become experts in the space. And for those people who just simply want to have exposure to a pot of gold equities, the ETF's a good way to do it. If you're a mining company, you want to be in that ETF, because otherwise you're missing out on all those lazy investors, all the investors who or even the investors who just need to have a company worth $2 billion or higher before they can invest in it, all those kind of investors. So that's what rewards scale. And the smaller companies these days, in the right market, they're going to do really well. And in fact, typically when there's a real strong bull market, they will even outperform the majors. But in a normal market, it's the old story. The pyramid starts at the large ones, the most liquid, the ones that are going to be the best performers, the highest multiples, and it trickles down into the small ones with the lower multiples and the much riskier asset bases. That's, I think, even more so today because of these large pools of capital that simply cannot go down market. And that's one of the reasons we've tried to build a big company quickly.
Makes sense. I think we have now a good idea of your thoughts on the gold price, what's going on at Equinox. Are there any other gold market trends that you would want investors to be aware of as we're heading into almost the last quarter of this year?
Well, it's a really interesting time, I think, to be an investor in the gold space. I think you've got to be somewhat of a contrarian, and that's usually worked for me. Certainly, is to think for myself and ignore the noise out there, ignore all the people who are buying and selling based on quarterly results and on short-term trends. You've got to find companies like Equinox. It's a good example of a company that's just is going to go from strength to strength to strength, and it has been sold off by short-term investors over the last couple of quarters for short-term reasons. And you've got to look into opportunities in companies like this, which will almost certainly have better quarters to come. Q3 should be better than Q2. Q4 should be a blowout quarter for Equinox. And next year, we should have a run of really great quarters. So you've got to have that more long-term view, I think, or even intermediate-term view, rather than just buying things on the basis of short-term markets. Try to think longer term. This is a long-term game. Think longer term, and think broad cycles. Don't just think you know, just because somebody says something about that might be considered negative for gold today, that it's going to be like that for the next 5 years. Things change quickly, and so try to, you know, sit back. You said it right at the start of this discussion. Sit back and try to look at the big picture. Try to look at what are the big macro factors affecting the economy, the markets, the gold price. Look at one of the big trends today is the gold equities are cheaper and cheaper and cheaper relative to the gold price. That's probably not going to last. So I would tend to opt for, you know, an ETF, like an equity ETF, or the actual gold stocks themselves, like Equinox Gold, as opposed to buying bullion today. I think it's got a much better opportunity. If I was more pessimistic about overall markets, I might say, you know, this might not be the best time to buy equities. It might be a better time just to buy bullion for the simple safety of owning physical gold. But I don't feel that today. I think the equities are poised for a great run, and I think of all the gold equities, Equinox Gold has as good prospects for higher performance than any of them. And I'm not saying that just because I happen to be chair of Equinox Gold. Well, okay, it's part of the reason I say that, but it's also because I really understand the value proposition in the company, and I think our stock is so cheap today. It's likely to outperform over the next 3 to 6 months at the very least.
All right. I think we did manage to eventually come full circle back to that first advice, because it's good advice, although a little bit tricky for people to stay on target and follow that sometimes.
Oh,
but
it is. It is. There's so much noise out there. There's so much. Everybody's got an instant opinion, and oh my goodness, it's very difficult. But I think it's still good advice.
I do too. And thank you so much for being here to share that with us again.
My pleasure, Charlotte. Thank you very much for the opportunity.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Ross Beaty.